Hi there. This week's candlestick just started for around 17 hours, and Filecoin's price is down by about 0.5%. So it's time to look at it through the Wyckoff lens and see what the whales are doing. If you're new to my sessions, I'll cover the Wyckoff stage, trend change potential, as well as key price levels. These are education content, not financial advice. Looking at the weekly chart of Filecoin, it looks like it's trying to stabilize within the close, around 93 cents that is ended up at last week. So just 17 hours ago, the price closed at that level. The bulls, if you look at the wake of the candlestick, they were working very hard to keep the price around that level over here. So last time we talked about this, the 1.03, that's where the week before closed. And now this week it closed at an even lower level at around 93 cents, like we just talked about. So let's set this line as well. Reason being, in previous sessions, I already mentioned, for altcoins in this round of accumulation cycle, a lot of them are setting all-time lows. So during this paper hands, diamond hands testing period, what I call, when you hear the accumulation cycle term of the Wyckoff method, sounds too technical. Think about it as a test by the whales, checking out paper hands. And until diamond hand remains, they're not going to stop. Okay, because at one point, people used to think that if you're a diamond hand, you will be a diamond hand forever. But that's not the case, because some people are basically just investors or speculators, whatever you call them. If they find better opportunities, they'll cash out and then go to somewhere else. So they will turn from diamond hands to paper hands. That's the reality of it. So don't always expect that if we don't have such a low in the past, within the, we can say it's not young anymore. It's still a little bit young at the teens age, right? About 8 years for Filecoin. The price profile can still change. Whatever low in the past, this time it doesn't stop there. So right now, during the exploration stage, if you try to DCA in, you need to have patience, because like I said, the whales won't stop. Of course, the most fundamental assumption is that the projects that you have chosen isn't going to stop running. That's very important. So you have to do your own research and see what the project team is doing. Is the community still active? All sort of things. So back to the chart here. The big picture hasn't changed. The test is still going on. What we need as a proof to improve or to confirm the situation is improving is something we call sign of strength. That means price advance with volume. How does it look like? Something that happened November last year gives you a better picture. So it either comes as multiple, like 2 to 3 massive candlesticks with much higher than average volume, meaning it goes up and up and up, or spreading along a longer period of time, may it be months, 2 to 3 months, slowly breaking through these key levels one after the other. The volume still would be higher than average. Look at how low the volume has been, right? Somewhere around here, these two red volume bars, they were higher than average, right? But not as massive as this one. So a series of these size that's significantly still higher than average is good enough as long as they stack throughout the timeline, right? It doesn't have to be like 2 to 3 these kind of massive volume every time. There are 2 different ways that this can happen. All right. So that's the confirmation for us about, capital or people are willing to come back to risk on mode. but it doesn't mean that it is going to shoot to another moon or another buying climax, okay? Because the whales will do one trick. After a sign of strength, they can still bring the price down. Well, this cycle already showed us that, after this massive pump, they have brought it back. As long as there are news that they can sell to the market that pushes the price to the downside, they'll do it. They'll check out the paper hands, like I said. So people bought the dip or DC along this way. The whales push it up. Some people got in somewhere in the middle. And then when the whale pushes the price down, those whoever got in didn't set their stop loss, will got stuck over there while the whales profit from the surge. And then they wait until everybody sells, and then they started to scoop in at a lower price just to pump it up again. That's the game. So go to the daily chart and look at the micro view. We've talked about multiple dates of potential trend change confirmation, and we are getting close to the third one after the first two was missed, okay? So this time, however, if you look at this trend, the price wasn't really challenging the ceiling of the downtrend. So even though it's traveling along the stronger half of the channel, so if you draw a center line, it doesn't have to be cutting the channel in half. More important is it aligns to where most candlestick heads and tails lie in the center, or like inside the channel. All right, sometimes it's skewed towards the right hand side, sometimes to the left. It doesn't matter. Just follow the flow. So here, the key is, even though it's lingering along the stronger half of the channel, but it's not very strong. You can see every 2 to 3 days, it's going to come back down to challenge the bottom of the channel. At one point, it's actually creating a low that's almost fallen outside of the downtrend. So that's why we have to adjust to make sure with the channel box is measuring tight enough. So the key over here is that when the price came down to a new level, or even below 0.93, the bulls push very hard, especially when it hits, you can see when it hits the bottom of the downtrend over here at around 78 cents 50. The bulls pushed very hard to make sure the price doesn't force to this side of the channel. And then we are back to at least the center line of the trend. So very key is that when we get closer to these dates, the 10th, for some of you in the eastern part of the world, of the globe, basically on the 10th now, miracle has to happen for the bulls to be able to push the price through the ceiling of the downtrend, confirming the end of the downtrend. So remember, it has to close outside of the trend. Better if it closes outside of it for a few more days, all right, just to confirm, because sometimes fake out can happen. The next day, it's going to fall back to the trend. So if this is a very stretched target, the next, where the price is currently trading above, the line that we have drawn in the beginning, points to Valentine's Day. So sometime between now and then, if the bulls gather sufficient support, then they'll be able to confirm that, okay, the downtrend is finally over. There are signs to this. Look at the volume over here. It's not very optimistic for the price to go above $1, given this massive candle plus the massive volume. If it's only just massive candle with very low volume, the case is different. However, the next day showed us there's still sufficient support when the price got close to 90 cents. Oh, sorry, not 90 cents, 80 cents, okay? It pushed it back to the 90 cents over here. So from the daily point of view, 90 cents is still an intermediate support, a short-term support, let's put it this way. So that's why you see today when it got close to the 90-cent mark, there was some push again. See this wick from the bottom, yeah? And the volume, the two red volume bars for the past 2 days is significantly lower than the previous days. So I would say that's a slightly relieving sign. However, it was also weekend. So the coming few days will be key as to whether this is going to be the actual short-term low. If it does, let's say if it's really stabilizing along this 88 cents mark, a little bit slower than the 90 cents, but I said many times, that's a level, not just a price point. Sometimes it's going to go a few percent higher or lower. So here, if the price really trades sideways from this point onward, just between these two dashed lines, over here and here, this is pointing towards somewhere near the 16th. So just 2 days after Valentine's Day. So we've got 2 more dates coming. And if the bulls grab the chance, they can finish or knock out this downtrend and start to build another trend, may it be sideways or even slightly upwards. Like I said in the beginning, for the test, this paper hands, diamond hands test, the confirmation comes when we see the sign of strength, meaning high volume and white candlesticks going up. Back to challenge the yellow key level of 3.15 at least. Why the yellow key level? Because of this automatic rally. So it's the stage right after the panic over stage. We call that selling climax. Basically, panic is over and people bought the dip, and the whales basically set the trading range top at this level, right around 3.15. Okay, that's why when you see the subsequent mini rebound, they tested that level again. Okay, this one closed right above the orange, this one closed between the yellow and the orange. So basically both the same, close within this range. So that's why we want to see that to challenge this level once again, just to confirm that, okay, the interest is back and people are, starting to come back. All right, so that's for Filecoin. If you're interested to access these sessions 2 days earlier than the others, join the channel membership now. Here's another video for you. Thank you.